Hey guys, today we're going to learn the income and expense statement. An income and expense statement, as you can see, I've given you two copies, one on your notes that looks like this over here. You can refer to, but I've also gone ahead and given you the income and expense statement in full so that you can refer to it as you're learning. We'll use this copy for something else later. An income and expense statement that lists and summarizes income and expense transactions that have taken place over a specific period of time, usually a month or a year. Here's how this compares to what we've been doing. You are in the process of learning money management tools. The first one you learned was Statement of Financial Position. In the Statement of Financial Position, you were trying to figure out, what is my financial position today? You should have already started that process. If you didn't start already, you will be doing that tonight with your My Financial Position statements. Now you're moving on to income and expense statements. This is, how have I managed my money in the past? So we just did today. Now we're doing, how are we managing our money in the past so that we can learn from our mistakes? And then in the next unit, you will be doing spending plan. That is, what is my future money management plan? So that's how they all fit together in this neat little puzzle. How can income and expense statement help you manage money? It can evaluate past financial decisions, make changes to increase your net worth, make changes to reach your goal, and improve financial well-being. Well, first of all, we discovered in our statement of financials, we discovered the fact that our assets need to be higher than our liabilities in order to equal a high net worth. We also talked about the fact that we need to increase our net worth, which is therefore we're going to have to increase our assets, lower our liabilities, which aka just means own more things, pay off our bills. Okay? Try to pay them off without charging so much. Also, evaluating past financial decisions helps us improve our financial well-being by setting goals, reducing money stress, and increasing our net worth. There's three components of the income and expense statement. There's your income section that has different earned and unearned income, and then received income from the government programs. Expenses, there's several arrays of expenses, and then there's net gain or net loss. In your mind right now, what do you think we should be having, a net gain or a net loss? We'll learn that a little bit later. What's income? Income is money received. There's different types of income. Earned income, this is any money earned from work. This is you going to a job and earning your paycheck. Unearned income, this is income received from other sources other than employment. For example, maybe your interest rates, your interest that you're receiving on savings accounts or stocks or bonds. Then there's received income from government programs. This offers a form of income that's usually temporary, that's received by the government. For example, unemployment or welfare. Earned income. To get more specific about earned income, here is what is applied on the income expense statement here. Any money earned from working for pay. So this would be wages or salary before deductions. So again, wages is what you make per hour, salary is what you make per year. Before deductions, meaning before taxes. Commissions, tips, bonuses. These are things like I work in Belks and I sell a pair of shoes or I sell clothes, I'm working for commission. In other words, the amount of my sales that I get credit for, I would get a percentage of them for my paycheck. Tips is like your server. So you would think twice before you don't tip anymore, because of the fact that a lot of your servers are waiting tables and making only tips. Then there's bonuses. Bonuses are on top of your paycheck. So like for example, you may get your hourly rate and then you get a bonus if y'all make certain numbers. Like a lot of car salesmen work on bonuses. So once again, how are they different? Commissions is different because you work solely on commissions. You do not get an hourly rate. You get paid based off of how much you sell. Tips is, you know what tips are. It's just like your hairdresser, just like your waitresses. You may get paid an hourly rate, but it's extremely low. Like $2.13 an hour is what I used to make when I was a server, but I got my tips. So you have to work extra hard to get those tips. Bonuses, you get your check plus a bonus. Okay, so those bonuses are worked for maybe if you're a car salesman and you sell a certain amount at the end of the month. Then there's tax refunds. That is considered to be an earned income because you did actually work for that money in order to receive those taxes back. Gross income versus net income. Very important for you to understand. If Evan earns $1,600 before taxes, this is his gross income. Recorded in the income section of the statement. So your gross income is recorded into the income statement, and that is before taxes. Then it's Evan's paycheck is worth $1,277.60. That is considered to be your net income. That is all the deductions taken out of this $1,600 to give you the $1,277.60. Unearned income. Income received from sources other than employment. Interest earned during time period. Money earned from investments during a time period. Sales of assets. Remember, if we sell an asset, so you've already learned what assets are, the things that we own. If we sell something, that would be unearned income. We made money, but we didn't technically go to work to make that income. And then money from saving and investments to help pay expenses during a time period. So in other words, if you go get money out of savings or you borrow money off of your investments like your 401k or something like that. Using savings and asset sales are not sources of income you can rely upon in the next time period. So savings and asset sales are not sources of income you can rely upon the next time period. This is kind of like getting by. Income received from other sources other than employment. Scholarships, grants from non-government sources. Money from others, when people give you money. Child support. There are some other examples of unearned income. Received income from government programs. May offer a form of income, usually temporary. Government programs such as workers' compensation, that's your unemployment, scholarships or grants from government sources. Think about the different types of incomes you have and where they may go. Again, you may need to review what goes in what section. What are expenses? Expenses is the money that we spend. Your expense categories is taxes, savings and investing, insurance, housing, transportation, food, and other. The other comes from we all have different expenses. In other words, all these things are pretty much AKA our bills. So I may have a bill that you all do not have, or vice versa, because we all choose to take care of our business different ways. Or we have different things that are important to us. Like, for example, pet care. Some of us may not have a pet, so we may not have that expense. Taxes. Taxes are deductions often taken from paychecks. We've already talked about taxes. We've talked about income taxes and payroll taxes here recently. A reminder to you, remember your payroll taxes is the taxes that come out when you are getting paid, which is better known as your FICA taxes. And remember, FICA taxes is better known as Social Security and Medicare. Do you remember how much Social Security is taking out of your check? 6.2. And how about Medicare? 1.45. So you should know that at this point. Numbers may be found on the paycheck stub. You'll find all this information on a paycheck stub, those of you that have one. If not, I'm going to provide one so you can see one at a later time. Taxes include in other expense categories. So taxes are included in other expense categories as well. Property taxes such as housing and transportation, that would go here. Sales and excise taxes are often included within the cost of other expenses. Remember, you just learned that. What's an example of excise tax? That would be, for example, gas. Savings and investing. Remember, we save present and in our future. Okay, we save for our future. This includes any portion of income that is saved or invested for future use. Retirement investments may be deducted directly from your paycheck. We also have already talked about this. Remember, I talked to you about having a 401k and a 403b. We also read several scenarios about these older people in our scenarios that we did for our statement of financial position. We talked about that they were saving for IRAs, okay, or 401ks. All of these things are retirement programs, which again, remember, is an investment if we are talking about it in the sense of the statement of financial position. Here it's an expense. Why is that? Because we're paying for something. And remember, this is like our bills. Why can savings and investments be both an income and an expense? Okay, so this is something that's really difficult for people to understand. Why can savings and investments be both an income and an expense? Using money from savings or investments to pay for expenses during the time period. Here it would be adding money to the savings or investments for future use. So here is if we have to take the money out to survive during the time period. So watch my cursor if that helps you. So we are in this situation, if savings is going to be an income, it is because we have taken money out for the time period in order to survive, pretty much. Okay? Here is if we're adding money to the savings or investments for future use. So this would be like my monthly contributions to my 401k or my monthly contributions to my savings, and that me just continuing to put it in but not borrowing from it. That's then an expense. Insurance. Insurance is a product that transfers